The last class we started the discussion on rule of professional conduct, which is chapter 3 of the ICAN study text, right? Just a quick recap so that there will be no missing or breakage in information, right? So we started discussion around rule of professional conduct, and I said essentially this topic is one of the most examinable aspects of the ICAN syllabus. And the reason is not far-fetched. You cannot call yourself a chartered accountant and you don't understand what it takes, okay, to be a chartered accountant in Nigeria. And the there are two codes of conduct, there are two codes of ethics that we need to learn in this chapter, right? Now, the first one is the IESBA Code of Ethics, all right? Now, the IESBA Code of Ethics is a code that stipulates all the ethical regulations that professional accountants all over the world needs to comply with. Okay, and they gave us, and in that code of ethics, there are 5 fundamental principles that all professional accountants, right, needs to what complied with. And I'm going to list the 5. Now, the first one is objectivity. The second one is integrity. The third one is conformity with technical standards. The fourth one is confidentiality. The fifth one is professional behavior. Those are the 5 under the IESBA. And I remember I said last class also that IESBA means International Ethics Standard Board for Accountants, which is also a subcommittee of International Federation of Accountants, IFAC. Okay? And I also remember I said that aside from the IESBA Code of Ethics, right, we also have ICAN, our own indigenous code of ethics, and that is ICAN members code of conduct. In this code of conduct for ICAN, it expects all ICAN members, right, to also comply with these 5 fundamental principles. And these 5 fundamental principles are independence, objectivity, integrity, confidentiality, and conflict of interest. I take it again. Independence, objectivity, integrity, confidentiality, and what? Conflict of interest. So these are the 5 that I can expect. These are the 5 principles that I can expect their members to always adhere to. Now, if you merge these 2 code of ethics and conduct together, it's going to give you what? 7, right? Knowing fully well that 3 are common to both of them, and those ones that are common are objectivity, integrity, and confidentiality. While conformity with technical standard and professional behavior is exclusive to IESBA, and independence and conflict of interest is exclusive to ICAN. That's how we arrive at 7. I hope it is clear. All right. Now, in an exam, why did I make this distinction? Now, in an exam, these are some of the things that make students to score very poorly or to perform very poorly in AAA. If the requirement of the question is silent as to whether in the requirement the main mention of ICAN or IESBA, right? If the main mention of IESBA, the first one I made mention of under IESBA, those are the ones you are expected to watch, to explain and discuss. All right? Those are the ones you're expected to do what? Explain and what? And discuss. Okay? Now, if they mention ICAN in the requirement of the question, that means they're going to only explain the one that relates to ICAN, right? But if the question is silent, they just ask you, from the case study, what are the fundamental principles? They don't give you whether ICAN or IESB. So it is expected of you to give them all the 7, provided all the 7s can be deduced or inferred or contained in that particular case study. I hope I'm making sense. So that is what I need to explain before we start. So these are some of the things you need to take note of when you are writing audit. Audit is very simple to pass and it's also highly technical to pass. So you need to strike a balance. It's not just about you reading. You can read the whole of audit and if you don't have that understanding, it's going to be difficult, okay? And that's what I'm doing to simplify it and make it interesting, okay, and enlightening as we go on. So without further ado, let's look at all those parental principles one after the other. Now, mind you, some of these principles, if maybe they are not on the face of this material, that is why I'm explaining them to you. Okay, the rest of this class is that we need to include as many information as possible. But sometimes, in a bit to not to make the material to be too bulky or to be too boring, right? We try to say that look, when you come to class, we are going to expatiate on some of those points there. So that is the way it is. So in your notes, as you are listening to this class, or you are watching, or you are going to listen thereafter, please just note all of this information. They are very, very important. Okay. Now let's start with the first one, independence. What is independence? Now, independence is divided into two. Okay, because if you look at the way we use independence in audit, you say that an auditor or a chartered accountant is expected to be independent and be seen to be independent. When they say that chartered accountant is independent, what it means is that the chartered accountant has what? Independence of mind. He has what? Independence of mind. That is the state of mind that permits the provision of an opinion without being affected by influences that compromise rational judgment, allowing an individual to act with integrity and exercise objectivity and rational judgment. So what this one is saying here is that when you are taking a decision, when you are expressing an opinion, you should not allow your opinion to be influenced by the environment or by individuals that are present, okay, at the time the engagement is being performed. So I give an instance. Your audit firm, you are the engagement partner of an audit firm, and you're auditing Dangote Cement, and you have completed the audit, and you're expected to have an exit meeting with the management and board of directors of Dangote, and you got an information that Aliko Dangote will be present on that day, right? Now, while you look at the financial statement of Dangote Group, perhaps maybe you saw some anomalies there, some material misstatements, some weaknesses in internal control system, which you have already noted that you are going to discuss with the management. But unbeknownst to you, on the day you are supposed to have a meeting and present your draft audit report and all your management letter, Aliko Dangote walked in. And before now, you had always admired Aliko Dangote, right? You see him as your mentor. And you don't want to ensure that you are going to present your report, and you think that it's going to affect his mood that particular moment. So immediately you walk in and sat down, he greeted, and you're about to roll out your audit report. And some of the management letter that you are supposed to explain, you decide to withdraw it. You do not present it again because you don't want to spoil the mood of Aliko Dangote. If any auditor find himself or herself in this condition, that is not able to act naturally, is not able to act professionally, is not able to conduct its business without fear or favor, such auditor can be said not to be what? Independent. Such auditor is said to be not to be what? Independent. Because once you are independent, you should have what? Nobody should have any right, okay, to influence your what? Your opinion, your judgment on any matter. I hope it is clear. Now, the second aspect, independence in appearance. What does this mean? And I said, when you look at auditor, I said auditor is supposed to be independent. and be seen to be independent. Now, to be seen to be independent is what that has to do with what? Independence in appearance. And what does this mean? What this means is that the avoidance of facts, okay, and circumstances that are so significant that a reasonable and informed third party having knowledge of all relevant information, including any safeguard applied, would reasonably conclude a firm's or a member of the assurance team integrity, objectivity, and fairness reviewing are the what? Compromise. So what this one is saying here is that the general public, others that are not part of the management, right? From from the from outside, when they are looking at you, they can deduce or they can conclude that you are independent or you are not independent. How will they do that? Now, they will have had some information. So let me give an instance. So you are auditing a client, right? The chairman of that organization, that client's company, happens to be one of the convicted corrupt politician, okay, that is widely known. So, and they know that he always indulges in what? Malpractices in his business. All right. Now you are the auditor, you are the external auditor, and all the people around you, even if you are saying that, oh, this man, I mean, you have integrity, you have independence, you're objective, you know what they will be seeing in you? They will be seeing the image of that man on you. They will be seeing the image of that man rubbing on you. They will say that, oh, there's no how you are going to present that report, that your report will not be influenced by that man. Do you understand what I'm saying? So what it means is that the way people conclude about you, about your position as an external auditor, can go a long way to determine if truly you have integrity, or perhaps you have your objective, and you also exercise what we call professional skepticism. What do you mean by professional skepticism? Now, professional skepticism has to do with an auditor having what? A probing mind. A probing mind to ask questions about evidence that has been presented. So when your client gives you any document, you request for a document, and they present the document to you, you need to ask them, is this document, is that all that you have? The information you've given to me is not complete. There are still some information I needed. Would you get those information or that information across to me? But then you're asking those questions. The person that's supposed to present with that information, we know that, oh, this person is a thorough professional. Because what they do, what the client does, what the client management does sometimes is that they only give you information as per your requirement. You say you want A, now they give you A. Even though you still need A, B, C, but what you are requested for is A. The management will present to you A. If you later forget to request for B, D, C, they are not going to go forward and say, sir, what should I bring B, C, D? They will not bring that one to you, because it assumes that what you have is already enough for you to make your opinion. All right? That's what we mean by rational skepticism, that you must be able to have what a question in mind. You have to be able to critique information that you are working with. Somebody gives you something, you need to check, ask questions. Are you sure what you are giving me can be trusted? Is it reliable? How sure are you? What other document do I need? All of those things. By the time you start asking questions, whoever is going to present anything to you, we always ensure that whatever information is presented to you is the fact. Okay? That is what we mean by independence. Now, any question before we continue? Any comment? Any observation? Okay, we proceed. Now, ICAN has some set of rules that that the institute believes could impair, okay, could impair or erode the auditor's independence. Let's look at them one after the other. Now, the first one is all members are advised to discharge their duties with integrity and objectivity. A member should not allow his name to be associated with a document, report, or financial statement that is misleading or biased. What do we mean by that? Now, as a chartered accountant, as an auditor, external auditor, any document you are going to append your signature on, make sure that you have read it and you have understood the content in that document. You shouldn't sign document based under duress. For instance, they brought some documents to you as a CFO and they ask you, the chairman or the ND is waiting. You just want you to append the signature. It doesn't have time. Okay? There's no time to go through the terms and conditions. Just append the signature here. He said you should sign here and here and here and here. That's all. So many people have appended their signature on such documents that have later on ended their career because they signed the wrong document. So any document you are going to sign, you are going to append your signature on, or you are going to share to others, you must ensure that you are able to verify the authenticity and the validity of that information or that document. Otherwise, if the thing should backfire, it's coming on the what? On the person. So as chartered accountant, as auditor, you are not supposed to be associated with document, report, financial statements that is misleading or biased. Number two, the auditor should not hold beneficial interest in the equity of the client's company. What that means is that as the external auditor of your company, of your client's company, once you buy shares in your client business, what it does is that it automatically erodes your independence. It erodes your what? Independence. It makes your independence to become what? Impaired. You are no longer objective because you have an interest to protect. And that was the case that happened in the Aeron Corporation and Otto Anderson in the 2000s, where the managing partners of Otto Anderson bought shares in Aeron Corporation. Another thing you also need to know, as an auditor, you should not accept fee, the amount of which dependent on the success of the assignment. So what that means is this. A client wants you to audit their financial statement because they want you to get maybe government contract or some grants from government or for some financial institutions. And he told you that if you can present to me an audit report that is clean without any reservations, yes, your audit fee is 5 million naira, your audit fee is 20 million naira, I'm going to give you 40 million naira because you have done a good job. That means it's giving you, it's putting you on what? On a condition. That is, if you can achieve my goal for me, this is what you are going to get. So once you have that at the back of your mind, there is no how your independence will not be impaired. There is no how. All right. The next one also, you should not act as an auditor where he currently acts for the client in executive capacity. That still speaks to the case between Air Corporation and Otto Anderson. They were the managing partners of Otto Anderson were holding executive position in Air Corporation. So automatically they were no longer objective. All right. He should not act for two opposing clients in the course of negotiation, settlement of claims unless he has been duly appointed under, duly appointed under due process of law as an arbitrator. What this one means is that you should not be a peacemaker. Who is a peacemaker? Now, you have a client that has trusted you so much and said that he has a concern that there was his business partner, that their relationship went sour some years back as a result of one bad deal that both of them got themselves involved with. Okay? And the guy now confided you that this is the guy now, asked the guy, what is the best person's name? He told you. Apparently, as he told you, you remember that you have heard that name before. In fact, you have worked with that man before, maybe as a client. All right? You said no problem. I will see to it. I'm going to mediate in the issue. We are going to resolve it. We are going to continue your friendship. Under no circumstance should an auditor or a chartered accountant settle disputes or become a mediator between two opposing parties. The only time you can do so if the person has gone to industrial court of arbitration and has been appointed as an arbitrator. Who is an arbitrator? Person that resolves disputes, person that resolves disagreement. Okay? So unless that happens, before you can act in that capacity. Another one, you must not give or receive, you must not give or receive from a client a loan or financial guarantee unless the client is acting in another course of business and the terms are not unduly favorable to the auditor. What does this mean? So you are auditing a client that is a financial institution. And you know right now, if a bank wants to give you a loan, it's always on the commercial rate, 45% interest rate, right? Now, you now approach them because you wanted your son to travel out of the country and you needed X amount of money. You know that, oh, I will be grateful if you can assist me to raise this fund. You now told you that, don't worry, because you are our auditor, we'll give you at a discount. That means the interest rate, rather than for it to be 45%, it will now be what, 15%. If such should arise, automatically the independence of such auditor has been what? Impaired or eroded. But if upon requesting from the client, that is the bank, I say that, okay, we are going to grant you the loan. We are going to pay at the commercial rate. If you are paying at the commercial rate, that is 45%, then there is nothing like that is going to affect your independence because you are still being objective. Okay, that's what we mean by that. Then another rule on independence is you must not act as an auditor for a company where is acting as a receiver. Who is a receiver? A receiver is a practitioner that has been appointed by the court to realize secured assets of an organization, to secure it, I mean, to realize the security of an organization in order to settle some outstanding debts or liabilities for the creditors. Okay, people that loan the company money. When they can't get the money and the money becomes long outstanding, right? They will ask that the court should appoint a receiver that will be able to sell the company's assets that have been secured. Secured here means that they are used as collateral. Okay, I hope you are getting it. Yeah. So if you are the receiver, you cannot act as the auditor because of what? Conflict of interest, and it's going to affect your what? Independence. Now, the auditor should not derive too great a proportion of his annual recurrent fee from the client or group of connected clients. 25% is considered, is regarded as being substantial. What do we mean by that? So you are an audit firm. You have seven, I mean, you have like 7 or 6, let's say we have 6 clients that you are currently managing, right? And each of those clients contribute 2.5 million annually. Okay, they contribute 2.5 million annually. Now, 2.5 million from 6 clients at the end of the year as audit fee is 15 million. Okay, so what that implies is that 2.5, okay, by 15, that means each of them, they are contributing 16%. Each of them, 16% of the revenue of the audit firm is gotten from each of those 6 clients. Now, if one of those clients business improves or expanded, and he says that I just had another branch in maybe in Sudan, or another branch in Gabon, or another branch in South Africa. So that means that the audit fee will increase from 2.5 to like what? 4.5. Okay? So 2.5 from 5 people is 12.5 plus 4.5. You add 17. Now, 4.5 divided by 17. What that means now is that that particular client that his business has expanded, his contribution to the revenue of the audit firm has increased from 16% to 26%. That means that that particular client contributes 26% to the revenue that's generated from the audit firm at the end of the year. So what are we saying here? Now, if all the 6 clients require for an immediate or urgent attention from the audit firm, who do you think the audit firm will settle first? Who do you think the audit firm will go out for first? Automatically, it is obvious. It is the one that contributes 26% more than others. That's what they are trying to say there, that you should avoid a situation whereby you are going to give favoritism or you give much attention to one or to some of your audit clients than the other. They should enjoy what? Equal service, equal treatment. That's what they are saying. That if such happens, the independence of such audit firm has become what? Eroded or impaired. That's what it means, okay? Next one. Personal relationship, either by blood or by marriage, may also affect independence. So what we are saying here is this. So if the auditor that is coming to audit the client is a brother or a sister or is married, is related one way or another to the client, there are some information, there are some activities that you'll not be able to ask the client. Why? Because of the relationship that exists between the client and the what? And the auditor. And that's the reason why when auditors, when they want to go for an external audit, they always have an in-house meeting within the firm and ask the engagement team, we are going to audit X Limited. These are the owners of X Limited. These are the things you need to know about X Limited. These are the promoters of X. This is everything you need to know they will present. You will now ask the engagement team members, does anybody have any relation in this company? If anybody indicates that he knows somebody there or has some connection there, such person will be removed from that engagement team. Engagement team here means that they are going for a particular engagement. The person is still a staff of the audit firm. So because if the person should go, the influence of that person might affect the entire assurance engagement. Do you understand? That's why they do that. And if anybody has an influence and he refuses to say it when the in-house meeting is being conducted, and the later gets to know, the such audit staff will also face the consequences because it's an integrity issue. All right. The next one, acceptance of goods and services and undue hospitality. Undue hospitality may also affect independence unless the values are modest. Now, somebody will ask me now, how do you define gifts that is presented to auditor or audit firms? Now, what I can say is this. Acceptance of gifts can be relative, okay? And we see our perception about gifts differs, okay? But what I can say is this. And if you accept any gift, and that gift could influence your independence or could influence your action as an auditor, then do not collect that gift. But if you know that if you collect that gift, it's not going to affect your sense of judgment, it's not going to affect your opinion at the end of the engagement, go ahead and collect it. So I can say that any gift that is of inconsequential amount, right, could be accepted, provided it will not influence the decision of the users of financial statements. Okay? Any questions so far? Any comment? Are we good? Please
Good,
respond.
sir. Hello, good morning, sir.
Good morning.
Yes, sir. Sorry, sir. I have a question.
Please
Now,
go
what
ahead.
I want to ask is that you said, the time you are speaking about the 25%, that if a company which contributes 25% of your income, you
Yes.
should not, give them a preference attention or thereabout.
Yes,
Now,
sir.
okay, sir. Then how about in the case of a red flag? If the company is having an urgent need which the auditor needs to attend to. How about that?
Okay. Let me answer your question. Now, what they said in that place is that now let me first of all give some perspective. Let's say you are a small medium audit firm. Let's say my name, Nadeba Desalu and Co. Child Accountant, is an audit firm. I have just 2 clients. Okay, I have just 2 clients. Listen to me now. I have just 2 clients, and one of them contributes 80% to my annual revenue. Does that not negate that provision? It does, right? But what we are saying here is this: in an audit firm, that is why you must have what? Quality control, system of quality control. Okay, you must have what? System of quality control. That is, there must be somebody that has been assigned to ensure that they monitor that you don't give preferential treatment. Yes, circumstances may arise that, oh, all of them needed your attention at the same time, right? And you might say that, okay, let's read the pros and cons, provided the other party or the other client will not feel ill-treated, will not feel bad, provided the person will not feel bad, able to attend to them also, there's no issue. What we are saying here is that there should be some form of what? Monitoring. Because anything that is not monitored, if care is not taken, it will go overboard. That is the essence of that particular provision. I hope it is clear. Is it clear? Hello, Mr. Michael. That's the question. Is it clear? Ufoma, do you have a question? Any other question?
So, sir, independence of mind and appearance,
Yes.
they varies based on the situations that confront the auditors, right?
Correct.
Okay, so that means it is possible that auditor can face the two at the same time based on the given
Very much. Yes, very much. At the same time, yes.
Wow.
Okay. Ufoma, any question?
Sir, hello, sir.
Okay,
Sir.
Mr. Michael, I'm with you.
Yes, sir. As you're answering the question, my network went off, sir. So I don't get the answer. Although I will listen to the recording, sir. So, but if you can still help me with the answer, I'll appreciate it, sir.
What I said was, if you are looking at a situation where you have a small, medium audit firm, like the one, let's say I have an audit firm, Adeba Desalu and Co, child accountant, okay? An audit firm. And I just have 2 clients. And one of the clients contributes 80% to my gross annual income as an audit firm. Will I say that, no, no, you have to reduce it to 50-50? The answer is no. So there are some exceptions to this. What we are saying is that there should be some form of system of quality control, right? That is going to ensure that all the clients, even if all of them request your service at the same time, there should be a way you manage the situation such that none of them will feel ill-treated. That was the response I gave. So it's just about monitoring. If you don't monitor it, it could go overboard. So you should assign or appoint another staff that will be in charge of what? Quality control management, okay, of the audit firm. That was what I said. I hope I'm able to answer your question, sir.
Okay, fine, sir. I'm okay with that, sir. Thank you very much, sir.
Yes. Mr. Ufoma or Ms. Ufoma, any question? Any question?
While answering the question, for example, maybe we are answering a question on this independence or independence rule. Do we have to answer it word for word? You know, you said we have to like cram some key terms.
No.
So can we just summarize, or can we just write it on our own understanding? Something like this.
Thank you very much, Sarat. What I said is this. The one that you have to write word for word, like I explained in chapter, when we look at chapter 2, is anything that has to do with audit procedure. If it's an audit procedure, you must write it one step at a time. It has to be sequentially arranged. You cannot skip any step. Okay? That's what I meant. For this one, there is no procedure. All right? Anytime you're answering a question that relates to anything that we are going to discuss in this diet, just ensure that, first of all, you have an understanding of that question. Then number two, as you are responding to that question, make sure that your response to that question is reflecting on the what? You are taking reference from the what? From the case study. Do not answer any ICAN AAA questions in abstract. For instance, you want to answer a question on independence, and they ask question on independence, and you are saying that how do they ask you, what can the auditor do? What are those conditions that can impair the auditor's independence based on the case study? And the case study that you have been presented with, there's no one that talks about that 25%. Okay? But because you are in this class, you were there when I discussed 25% above the what's it called now? The revenue that is being generated by the audit firm. I say, no, that one is, let me put it. If you put it there, it's going to be out of point. Why? Because if you look at that, if you look at the case study that you are answering, it didn't make reference to that particular situation. Sometimes some of this information could be inferred. Okay, you can infer it. You can pick it up from. It might be silent in the question, but if it's not silent in the question, if you cannot deduce it from the question, then you have to go in line with what you have in the question. What I'm saying is this. If you go to, let's go back to that page now. I want to show you something. Now, we just explained independence. If out of this, it is stop at 10, J is 10, right? If in that case study, the ones that could be replicated that you could get is just A, B, C, D, and E. But you have already learned all the 10. And you say that, oh, I will impress the examiner. You now put all the 10. Now, what you have done to yourself is that, first of all, you have not gained mastering of the case study. You have not understood audit, advanced audit, and assurance because you are writing out of point. What we are saying here is that whatever your answer is, let the person knows that you are picking your answer from the case study, from the question. Sometimes some answers can be deduced. It might not be on the case study. Yes, I can understand. But if you can deduce this, there's no crime about that. But for you to just bring in something abstract, because that's what you have read over time, you just come and pour it like that, everything in verbatim, without making reference to the case study, then it defeats the purpose. That's what we are trying to say. Okay? Madam Sarah, how are you able to answer your question? Okay. Any other question?
Yes, any terminologies relating to independence as for auditing? We made mention last class that when answering questions relating to case scenarios, there are some terminologies that must be applied.
Yes.
So is there any particular one relating to independence that we should take cognizance of?
Those are now for independence or any of these rule of operational conduct. All those
Yes.
technologies are what we are discussing now. Independence, objectivity. Those are the things we are discussing. All these are terminologies that are really related to this particular chapter we are on. For instance, let me give you an instance. Somebody is asking you in a question. You wanted to answer a question. You're saying that as auditor, you need to be truthful. You need to be transparent in what you are doing, right? So that you'll be able to demonstrate that you are a professional accountant or a child accountant. You need to be truthful, you need to be transparent. Rather than for you to be writing this English, you can just use a term. The auditor needs to be what? Objective. The auditor needs to be what? Independent. So that independence you mentioned, the objectivity you just mentioned, has said a lot than what you would have written in English, in ordinary English. Do you understand now, sir?
Thank you, sir. Thank you, sir.
All right. So we can move on. Let's go to objectivity. What's objectivity? Now, objectivity is a principle that imposes an obligation on chartered accountant to be fair, intellectually honest, and free of conflict of interest. What this one means is that as a chartered accountant, you must have a fair sense of judgment. You should not allow emotions. You should not allow bias. You should not allow sentiment. You should not allow prejudice to affect you when you are trying to make a decision or express an opinion as a chartered accountant. Okay? So let me give an instance to that before we look at all those other examples you have here. So you are working in an audit firm. You are the engagement partner. And maybe you have interest in one of the audit associates that works in your firm. All right? Now, you have not expressed, whether you have expressed your intention or you have not expressed your intention to this lady as the engagement partner. But on one occasion like that, on one day like that in the audit firm, this your acquaintance, this lady that you have interest in, there was a case that was brought before you for you to be the what? For you to decide on whether the lady deserves what? A query, a suspension, or a dismissal. Okay? Now, let me give you an instance. So if the lady you had approached the lady and the lady turned down your offer that she's not interested, she doesn't like you. You have accosted her several times. She said she does not want any relationship. And you are looking for a way to get back at her. Now, you have been presented with this kind of situation now. You are the one that's going to decide the fate of that lady in that audit firm. Now, if you allow your sentiment, because, oh, this lady, she was pompous, and she didn't want to accept me. She is this, she is that. You allow that sentiment to affect your sense of judgment. I'm telling you, even with the fact before you, you might make the wrong decision. And when you make the wrong decision based on your sentiment, then it shows that you are no longer objective. Do you understand? That would mean by objectivity. But if you look at the case critically, and you allow yourself to be devoid, that you allow that, you don't allow sentiments, emotion, bias to affect your sense of judgment or sense of reasoning. That means you are what? You are emotionally intelligent, right? Even the lady will say, even if she goes outside to discuss that, maybe at the end of the day, say that, oh, what she did was wrong, right? She needs to go on suspension. Even if she goes outside to go and backbite you or blackmail you or do whatever thing, the people that she's going to relate the information with, some of them tell her that this person was fair enough or has been fair enough in deciding this case. Okay? Another instance is this. You had a judge. You had a judge that while she was small, while she was very young, thieves came to their house and assassinated her parents right before her eyes. She saw the person. She was like 7 years old then. She saw the guy. Now, 25 years after, she has, by providence, by grace, by God's grace, she is now a judge. And that same person that assassinated her parents was brought before her for what? For judgment. Now, what will she do? She will just sit and watch the two lawyers argue it out in the courtroom. Now, if it's somebody that is emotional, that is biased, even before the lawyers start to argue, she will just say, I know what I'm going to do. This is payback time. If you kill my parents that time, this is the time I'm going to get back at you. I will say that you go and face firing squad. You will make sure that you will not be able to appeal this case. And when before they just like, okay, don't worry, I know what to do. The person is found guilty. Take him to the firing squad or let him sit on the electric chair or give him some lethal chemicals or injection that the person will die. If he goes ahead to do that, people will know that, oh, this person is highly emotional. But if he was patient or she's patient to wait for all the both lawyers to argue it out and be able to present our case, I mean, marshal out our judgment based on the facts that were presented at the court of law. By the time she's going to pass judgment, and after she passed the judgment, the culprit did not know that she was the lady or girl that he killed her parents years ago. You know that the culprit will not even feel anyhow. Why will he not feel anyhow? Because he knows that this person had been fair in her judgment. But if she had irrationally stated that before they even started the argument, who is that person? Okay, don't say, okay, don't worry, you don't need to argue. I have decided on this case. This person should go and sit on the electric chair. You should give him that injection. You should face firing squad. Even the accused will know that something is wrong. This person, why does this person hate me so much? Have I had any dealing with the person? It's going to cause for questions. So what we are saying here is that as an accountant, you should always be able to what? Have a balanced emotion. We should not allow emotion to becloud our sense of judgment. That's what this particular principle is talking about, okay? So, child accountants are exposed to situations which involve the possibility of pressure being exerted on them. This pressure may impair their objectivity. Relationship should be avoided, which allows prejudice or influences of others to override objectivity. Okay? Child accountants have an obligation to ensure that personnel engaged on professional services adhere to the principle of what? Objectivity. Okay? Child accountants should neither accept nor offer gifts or entertainment which might later be believed to have a significant or improper influence on their professional judgment or those with whom they deal. What constitutes an excessive gift or offer of entertainment varies from situation to situation, but an accountant should avoid circumstances which will bring their professional standing into disrepute. So what we are saying here is this: at any time you are going to accept gift from your client, ensure that that gift do not in any way influence or affect your what? Objectivity. That's what we are saying, okay? I hope that is clear. Any question on that one? Any comment? So we proceed. Let's go to the next one. Integrity. Now, the next principle is what? What is integrity? Now, the principle of integrity imposes an obligation on all child accountants to be straightforward and honest in all their professional and business relationships. It implies fair dealings and what? Truthfulness. So, child accountants should not be associated with reports, returns, communication, or other information where they believe that the information contains a materially false or misleading statement. So any information you have not verified, do not share it. Do not append your signature on it. Also, they believe that the information contains statements or information furnished recklessly. You should not furnish any information recklessly. If you don't have the fact, do not join them to what? To share it. Okay? Also, where they believe that the information omits or obscure information required to be included where such omission or obscurity will be misleading. Okay, a member's advice and work must be uncorrupted by self-interest and must be unduly influenced by the interests of other parties. Okay, I hope you understand. So what they are saying here is that as child accountant, at all times, you should always ensure that you are honest, you are truthful, and you are straightforward. Okay? So for instance, you went to audit a client now, and the client says that, engagement partner, please come. I can see that you are very diligent in what you are doing. At the end of this engagement, I know you might find out some irregularities, but please do not escalate. Do not escalate it. I will give you 10 million naira as pocket money. for cooperation. A good engagement partner, what will they do? When he gets to the audit firm, we seek advice from his what? From his other partners. And they will tell him or her how to deal with such instance or situation. From then, you know that this person is very honest. But if you decide to say, okay, no problem, I'll cover you up and collect the money. And some years down the line, the whole issue, the whole scenario was revealed. What do you think will happen to such person? The person is going to lose everything that he has worked for in years. Do you understand? So that's what we mean by integrity. The next one, compliance with technical standards. Compliance with technical standards. What this one is saying here is this. As child accountants, right? At all times, as child accountant at all times, you must ensure that you are up to date with information about your client's business. You must make sure that you're up to date with information about your client business and also be current with happenings in the business environment or in the profession that you currently are in. Okay? So what am I trying to say? So as child accountants, right, you must ensure, as child accountants, right, you must ensure that you keep updating your knowledge. What do you mean by updating your knowledge? Now, ICAN has changed syllabus, they just changed syllabus this year, May, right? Now, for those that are qualified years ago, if they don't keep updating their knowledge, in no time, by now, they will have gone what? Rusty. They will not be what? Relevant again. All right? So what did ICAN do? So what ICAN did is this. ICAN now set up what we call a mandatory continuing professional development. Now, mind you, I said there are some technologies that are already archaic. You should not be using them again. For those of us that did auditing prior to 2020, what we used to call MCPD now, mandatory continuing professional development, then was called mandatory continuing professional education, MCPE. That's what we used to call it then, if you can remember. Now, if you go and write MCPE in your exam now, you will know that you are living in the past. So they are going to analyze you. From 2020, when we had COVID, that technology changed from mandatory continuing professional education to mandatory continuing professional development. Why did it change? Now, at that time when we are using MCPE, what happened is this. ICAN has offices scattered all over the country, right? They want to organize any symposium, they want to organize any training. What they do is that they make the training to be what? Physical. Every person that has made payments, or if it's a free training, they will converge in a location and the training will be conducted, or the symposium will be conducted. But at the turn of 2020, post-COVID, we discovered that there's need for us to exercise social distancing. And that gave rise to what? Virtual training, virtual meeting, webinar. Okay? Now, that means that you don't have to be physically present in a place before you can get trained. You can be anywhere in the world. When you have the login access, you'll be able to enjoy the training. So what I can say is that, okay, so because of all of these new developments that has affected the global economy, right? Not only ICAN, all professional bodies, they adopted a new name. Rather than using mandatory continuing professional education, they change it to mandatory continuing professional development. Okay? Now, what ICAN has now done is this. in a way to increase or to enhance the education of their members, right? They created, they developed 6 faculties, meaning that as an accountant, once you qualify now, let's say you qualify this diet, you are going for your induction. On induction day, you'll be given a form, right? Where they will tell you that you must choose a faculty. A faculty means area where a field where you want to what, specialize. Accounting is very broad, right? Which area do you intend to specialize going forward? So that is how we have these 6 faculties. You have the audit, investigation, and forensic accounting. You have the taxation and fiscal policy management. You have the insolvency and corporate engineering. You have information technology and consultancy. You have corporate finance management. You have public finance. So these are the faculties. So you are expected to belong to one of these faculties, subject to a maximum of what? 3. Minimum 1. Maximum 3. Okay? So as you are inducted, or as you are getting inducted, you also be expected to belong to one of these faculty. So what they do in this faculty is that they organize training from time to time to enhance your knowledge, to enhance your information, to keep you updated with current happenings in the world, right? Like these new tax reforms that are just being passed now. For those of us that belong to the taxation and fiscal policy management, there has been so many trainings, so many enlightenments that is currently ongoing in these faculties that they are trying to do what? Trying to sensitize their members, ICAN members, because they know that when it comes to implementation of these new tax reforms, the 4 tax laws or tax acts that were passed, okay, last month, right? The clients of the audit firm, some of them, they will start asking questions now. What is the implication of these new tax reforms on our businesses? Well, first of all, what are the implications of this on the what? On the payroll, staff salary, and all of those things. You start asking questions now. So as a professional accountant, you're expected to be well prepared before that time comes. It will not be nice when they start asking you, say, okay, don't worry, I'll get back to you. I don't really know, but I'll get back to you. It will not be nice. So what you're supposed to do is that before that time comes, you already equip yourself. And that is what these faculties are doing. To get you equipped, to get you enlightened, so that when your clients start asking those questions, you will be in the right sense, right frame of mind, be able to educate, enlighten, and inform them. So in that way, we'll be building the reputation of what? Of the institute. Okay? I hope that is clear. So as an accountant, you must always keep updating your knowledge, right? So that is that. Any questions so far? Any comments? Any observation?
No.
Are we good?
Yes, sir.
Okay, we go to the 5th one, confidentiality. Now, what this principle states is that as a chartered accountant, you are not expected to divulge or to reveal sensitive information about your client that you are in possession of. I take it again. Any information that you are in possession of as a result of what? Privilege. Because you are working as an auditor, that's why you're able to have access to that information. You should not use that opportunity to now go outside and broadcast that information to the whole world. That is what this principle is saying. You must be able to what? To exercise what? Restraint. You must be reserved with information. Okay? But what this one is saying here is that apart from you being reserved and restrained to divulging client information, there are this is the only principle that has an exception. All the other ones, you must not do. Don't do. This one, is only one, this is the only principle that has what, that has exceptions. That is, yes, you are not expected to divulge, you're not expected to broadcast your client's sensitive information to the public or to your friends or to anybody. But there are situations where you would need, or there are situations that will necessitate you needing to reveal, to broadcast your client's privileged information. All right? So what are those instances? Let's look at them. Number one, where the law had authorized you to divulge your client's information. So what will that be? So your client is involved in money laundering and is being prosecuted. And because you are the auditor of your client's company, they have to come and do what? Come and testify for or against your client. At that point in time, it is not that point, it's not that time you now say, I have to be loyal. Let me call my client. I am going to testify in court against you tomorrow. Please don't be offended. Or what should I say? You don't need to call them in that instance. The court has called on you. They've done their investigation and they found out that you are the auditor of this client. You don't need to seek permission from your client before you appear in court. You have to go to court based on what? Based on the information or based on the invitation that has been given to you. That is one. Okay? Number two, where there is a professional duty or right to disclose. What do we mean by a professional duty to or right to disclose? Now, you found out that your client is into money laundering. And before your client will put you in trouble, what did you do? You escalated the matter to the police. What did you do? You escalated the matter to the what? To the police. Or you find that your client is into some illegal, unlawful act. What did you do? Before the team will now bounce back on you, you quickly what? Escalated the matter to the law enforcement agency. All right? I hope you are getting it. Number three, another instance where you are going to disclose your client's information is where your client has not complied with what? Non-compliance with laws and regulations. So you have a client that has not been filing or paying his taxes for years. And also your audit fee, he deducts the withholding tax, yet he does not claim it on your behalf. You know, it's going to be a criminal offense at the end of the day. So before you start being implicated on such matters, what did you do? You reported to the law enforcement agency. So these are the instances where you will not be penalized if you divulge your client's sensitive information because of these exceptions. Otherwise, you are to keep your mouth mute and not to disclose any information to anybody. I hope that is clear. Any question? Any comments? Please respond, though. Please, so.
No question on my end. No comment on my end.
Thank you. Okay, that means I want to believe that everybody is fine, right? Okay. Mr. Emmanuel, any question? Mr. Emmanuel, any question?
Okay, all I'll just say is that audit is too dicey, sort of, but it's fine. We'll keep learning.
Well, you understand now, right?
Hello, sir.
You are getting it. Yes.
Hello, sir.
Yes, I'm with you, sir.
Sir, is it not professional? I let my client know if EFCC call me because of their transactions. Is it not professional? I tell them, like EFCC is questioning me. They are inviting me for a question because of their company, of their transactions, of their dealings. This is my question, sir.
Okay, thank you very much. Remember the last class, we looked at what? Money laundering. And I know I specifically explained conspirators. agents, and what? Accessories. I made mention when I explained it, I spent time explaining this thing, right? If your client had been implicated or is being investigated and EFCC had summoned you as their auditor, first of all, before you honor the invitation, ensure you understand the content of that court summon or warrant of arrest. Because sometimes there has been instances where it wasn't you that they wanted, it wasn't the audit firm or it wasn't the person that they wanted to invite. But because the person was already jittery, because the person was afraid, he didn't even read the content. He just said, okay, no worry, I'll come, I'll come, I'll come. He got there and everything turned against him. So first of all, you need to read the content of whatever information, letter, anything that the law enforcement has presented to you before you go. Now, if they ask you to come and testify against your client, at that point in time, if you go ahead and inform your client, what you have done is that you're already acting as an accessory to him. That's the way they are going to see you. Because if you had an objective mind before that I'm going to say the truth and nothing but the truth, and you now call it, you go and say that thing, I'm going to lose my license, so I won't be able to continue my business again. And this is going to happen. I will even die. My wife will also do this one. I'll go to prison. Start to appeal to your conscience. That's going to change your, what's it called? Your mind. So rather than for you to be objective in court, you now have what we call a dilemma. Within you, you'll be fighting. Your good conscience and your bad conscience will be fighting within you. And there's something that is as bad as that. For some people that have conscience, so some people don't have conscience, you understand? Some people, the day they were born, that's the day they murdered their conscience. They don't have conscience. But I'm talking of people that have conscience. For those of us that have watched Pinocchio, you understand what I'm saying? If you have conscience, there are some things you cannot even do. You cannot hurt a fly. But some people, the day they born them, after their death, they just murder their conscience. For those that have conscience, if you are faced that kind of situation, that can even kill the auditor, even before the court summons, because it's going to be down. Which person should I support now? Is it the client or the government? So that's why we always say that do not discuss with your client before you go. Just go. If you are sure of the information that has been presented before you, go there and say what you know. Because they are the one that, and if your client asks you, you should have called me, and I say no. Before I got there, they even seized my phone. In fact, my phone is being tracked by them. So you will know that, okay, that's the reason why you did not call them. You have to be very smart sometimes, right? Right. Any other question?
Okay, sir. I'm very grateful with the answer. So being smart. Okay. I don't want to drag the class, sir. Thank you very much, sir.
If you have any question, consult me privately. Okay? All right. So let's continue. The next one is conflict of interest. Okay? Conflict of interest. Now, conflict of interest is another principle that we are going to talk about. What does it mean? Now, conflict of interest is divided into two. We have conflict of interest between members and clients. Then we have conflict of interest between competing clients. I'm going to explain them. I don't want to bore you with reading this note. Is the note I'm summarizing? Not that I'm saying anything else. Is this note that we have here, this material that I'm going to explain with now? Now, the first one, conflict of interest between members and clients. What does this mean? So what this means is that as a child accountant, right, you should not accept or continue engagement where there is what conflict of interest between the members of firm and its client. The test is whether or not a reasonable or informed third party would consider the conflict of interest as likely to affect the judgment of the members or the firm. E.g., where members compete directly with a client or the receipt of commission from third party for introducing a third party. You can see this is very winding. Let me explain what this thing means. Conflict of interest between members and clients. So you are the auditor to ABC Limited, right? Now ABC Limited started as a sole proprietorship and gradually it expanded. It became a company. Now, upon becoming a company, they started using accounting software. They started with Excel. They now advanced to accounting package, the likes of what are they like? Sage 100, Sage 50, Sage 300. Okay, those are accounting packages. QuickBooks, Tally, those are what they were using. But in 2024, the business expanded and the accounting package that they are using would no longer support the business. So as the auditor, when you audited the account for 2024, you recommended that there's a need for them to change their what? Their accounting system. And upon the receipt of this audit report, the client called you for a meeting and said that you know very well that all this while you have been our what? External auditor. And you remember that all these your recommendations will always what? Fulfill them. In this particular matter now, I don't know anybody or any organization that can help me to implement an ERP, Enterprise Resource Planning. So what can you do for me? You now say that, okay, no problem. I have a colleague or a friend that's into ERP implementation. So what is ERP? What is an accounting package? An accounting package is just an accounting software that is solely used to perform accounting functions, to post journals, to raise ledger, prepare financial statements. That is all. That's an accounting package. It's a software. Now, it only serves account departments only. Now, ERP is what? Enterprise Resource Planning. So this one serves not only the accounting department, but all other departments within the what? Organization. So ERP is more robust. It accommodates other modules for other departments. And it is what? It is user-friendly and you can log in concurrently at the same time. Unlike the accounting package, once you are like 5 or 6, one person needs to log out before the 6th person can log in. There's always restriction. Even though you can always increase it, but initially at the onslaught, there's always restriction. But for ERP, you always have large number of users that can log in on the system, access information on the server at the same time. So it now asks you, who do you know? It's okay, no way, I know somebody that can do the implementation of ERP. You now call the person, contact the person, and the person now say that, okay, because you've got business for me, this is the first business we are doing together this year. I'm going to give you commission, 10% of the fee of the contract. You say, no problem. You collected the money. Now, the guy came on board. You did not tell that your client that the guy has given you commission. The guy continued. After 6 weeks, 7 weeks, 8 weeks, the guy could not deliver on the ERP implementation. And your client becomes apprehensive. He started to rage, started to shout. If not, I'm disappointed. I don't know you can be like this. And why the client was disappointed, why he was shouting, the consultant, DRP consultant now said that I would have done a better job, but part of the money I'm supposed to use to buy XYZ, I've given it as commission to this your auditor. Are you getting the scenario now? I've given it to what? This your auditor. So that was what affected my inability to get some tools to be able to complete this project. So in that instance, that is a typical example of what? Conflict of interest between members and clients. I hope you have gotten it. So ordinarily, what the auditor is supposed to have done, once you have done that, once you collect the commission, just tell, even before you collect just tell your clients, sir, this person, if I introduce him, he might likely give me some commission because I referred you to him or you to her, okay? You know what I'm saying? You say that. So that when the consultant is trying to blackmail you, the woman or the man will say, yes, he told me already. But that does not mean that you not do a good job. You understand? In a way, you'll have doused the tension. When this instance, you will not tell your client. So that creates what we call what? Conflict of interest. Because you are trying to get from your client, you are trying to benefit from the what? From the consultant. You understand? So what are you supposed to do? So the first thing that the auditor is supposed to have done is to identify the possible conflict of interest. What I just explained now. You also need to evaluate the possible problems. I just explained it also. Then it also acts to manage or avoid the conflict where necessary. So it's all what I just explained now. That's a safeguard to the what? To the auditor. If he had done any of this thing I earlier explained, possibly he will not find himself in this mess. That is conflict between members and what? Client. Any question? Are we together? Any question, comment, observation? Hello?
Good to go, sir. For me.
I'm not sure I understand very well. Are you saying it's not okay that they collect commission?
Look at it here.
I'm not sure I understand your
Hold on.
explanation.
The receipt of commission from third party for introducing a third party would lead to what? Conflict of interest. That's what I'm saying. Okay? Do you get it? That's what I'm trying to say. If you want to collect commission, ensure you disclose to the client that the person is going to work for. If the auditor had disclosed to the woman or the business owner that this is the situation on ground, by the time the consultant is trying to blackmail the auditor, to not be an issue at that point in time. There's nothing bad when you introduce somebody to somebody and you get commission. There's nothing bad there, provided you are being transparent. Do you understand what I'm saying? Do you get it?
I understand on my own end.
Okay, thank you. Madam, I hope you have gotten it.
Yeah. So thank you, sir, for that explanation. I mean, from my point of view, it's even better to refrain from collection because it would impact the judgment in the long run. Whatever may be the effect of maybe on the performance of the software or in any case in the future, somehow your judgment regarding the evaluation of the software might be impacted in any way.
Yes. So what I'm saying here is that before you go ahead to find yourself in that situation, you have to do these three things. First of all, identify possible conflict of interest situation. Number two, evaluate the possible problems. Number three, act to manage or avoid the conflict when necessary. Once you can answer these questions, if you like collect the money, if you like collect the commission, you would have been able to deal with it. But what would have saved the auditor if he or she had disclosed to the business owner that the money, he has collected some money as commission for introducing the person to you? Okay, Madam Sarat, I hope it's clear. You are clear, right? You see, I'm not rushing this thing. This we're supposed to have finished this thing, but I'm taking time to explain that when you pick this material and read again, it will be interesting. That is the essence. This thing I will have finished it. I will have finished chapter 3 by now. But there's no point in me rushing if you don't get it. I want everybody to get it. I don't just by the lecture was just fast. You could not even get anything. That's why you see me, I'm using the examples. All these examples I'm using, I can twist it and use it to form questions. Become a scenario in an exam. And these are how you are going to be able to answer the question if you find yourself in such a situation. Okay, let's go to the second one. Conflict of interest between competing firms. What does this one mean? So a firm might act for two clients that are in direct competition with each other. The firm, a professional duty of confidentiality, and so will not disclose confidential information about on client company to his competitor. Again, the test is whether or not a reasonable or informed third party would consider the conflict of interest as likely to affect the judgment of the firm. So let me also break this one down as an example. KPMG is the auditor to Coca-Cola, Nigerian Bottling Company Limited. KPMG is also the auditor to 7-Up Bottling Company Limited. Both of them, they are manufacturers of competing brands, Coca-Cola and Pepsi. Right? Now, if an auditor or an audit firm find himself or themselves in this kind of situation, it is what we call conflict of interest between what? Competing firms. Now, what should the auditor do in this instance? The auditor should ensure that he does not breach the duty of what? Confidentiality. Because as the auditor to that company, to Coca-Cola or the Young Bottling Company, as auditors to 7-Up Bottling Company, there are some information that will have been bestowed or entrusted in your care. Could be trade secrets, could be any useful information. But you should not at any point in time divulge this sensitive information to your opposing or competing firms or clients. Do you understand? So you are the auditor to Coca-Cola and 7-Up, and you now say that, okay, don't worry, I've audited Coca-Cola. I'm still going to go and audit 7-Up. There is no how, if you are going to be the same person that's going to audit Coca-Cola, that will now go and audit 7-Up, that you will not divulge some sensitive information. There is no how. What should you do in that at that particular point in time? So that a third party, general public, we know that yes, you have been able to protect the conflict of interest that would have ensued from this kind of scenario. What should you do? So in an audit firm, you have different partners there. So partner A, you go and audit 7-Up. Partner B, you go and audit Coca-Cola. When you do something like this kind of arrangement, right, you will have been able to safeguard any instance that will lead to what? Conflict of interest between competing firms. And by using separate independent audit teams for these two competing clients, that act is known as what? The use of what? Chinese wall technique. Chinese wall technique. Chinese, you know Chinese, right? You know the Great Wall of China. Chinese wall technique. That is what it means. The use of two separate independent teams to avoid situations of what? Conflict of interest between competing firms is known as what? Chinese wall technique. Is that clear? Are we together?
Yes, sir.
So other safeguard that you can also do, you can also employ is that you need to tell both firms, both clients, that yes, you are the auditor of both of them, but I'm going to sign a non-disclosure agreement that at no point will I divulge any of your information to either party. Okay, it needs to say that also. All right. So those are the safeguards for conflict of interest between competing firms. Any question? Any comments? Any of the they are good, right? Let's go to the last one. Professional behavior. Professional behavior. You should write that one down. If you don't write it, just listen to it. You get the note, you get the recorded version. So, what do you mean by professional behavior? Now, professional behavior is a principle that expects all chartered accountants to comply with all the laws and regulations, and also ensures that in the conduct of their engagement, they do not bring about disrepute to the institute. I take it again. The principle of professional behavior expects all chartered accountants to abide and adhere to all relevant laws and regulations, and also desist from acts that will put the institute into what? Disrepute. That's professional behavior. It also extends to the use of what? Vulgar language, of vulgar words in the conduct of engagement. So what am I trying to say? So you want to go and audit a client now, and the client says that, okay, before we start, let me be open to you. We committed fraud to this amount, but I don't want you to disclose it. So you take half of money, we'll give you X amount of money so that everything will not be revealed to every other person. Don't worry, just cover us up. We are protected. If any auditor is found to have acted in this way, the person has violated the professional behavior principle. That's number one. Because at the end of the day, if the thing is blown out of proportion, what will happen is going to dent the image of the institute, ICAN. Okay? Or it's another case. Your client is somebody that is very troublesome, right? You have been the auditor for 7 years or several years. But what you observe is that in this last couple of years, like 2 years down the line, he has always refused to pay your audit fee at the end of the engagement. And it didn't even stop at that. So each time you go and seek your money, your audit fee, what does he do? He tries to abuse you, shout you down, embarrass you, disgrace you as an auditor. But it has gotten to the height, you can no longer bear it, you can no longer tolerate it. What did you now do? The last time he came, the last one that brought the garments back, he went to his office and he said, get out of my office. I don't want to see you, useless person. Okay? That was the last straw that brought the garments back. What do you now do? You just remove your suit, your jacket, your tie. You went and got a bottle, you broke the bottle and said that, just touch me, I'm going to stab you this morning. So if you find yourself in that situation and you started acting in that order, it also relates to what? Professional behavior. That means you are no longer a professional. I hope you are getting it. Okay, that's number two. Another example of professional behavior is this. So you have a client, right? And rather for you to be using normal English to transact or to relate with your client, you are using American slangs to relate. All those nigger, all those F word, you are using all of those slangs. And the guy is not too happy with you. Especially if the client is an American. Or some of us, when we see Chinese on the road, we start to display all those kung fu tactics. You start to do all those and say, okay, come and fight. I've seen somebody that does that. Or you see Indians on the road, you start to sing all these their love songs. You are embarrassing those people. So all of these things are what? They are what? They relate to what? Professional behavior. So the use of all those foul language is not expected. Okay? Because at the end of the day, it's going to affect or turn the image of the institute. I hope that is clear. So we have explained all the 7 principles now. Okay, we've started with, we talk about independence, we talk about integrity, objectivity, confidentiality, conformity to technical standard, what else again? Conflict of interest and professional behavior. We are looking at all the 7. Any question, any comment, any observation? Are we good? We can continue. Okay, let's continue. Now, the next we're going to look at now is threats. So what are threats? All those fundamental principles that we just explained, right? They are good. And we are expected to comply fully with all these fundamental principles. But what we have seen is that sometimes we find ourselves in some precarious situation that we cannot help ourselves than to do what? Than to try to what? Adjust or bend or fail to comply with those rules. When you find yourself in that situation, it is known as what? Threat. So threat is what? Anything or circumstance that attempt to breach compliance with the fundamental ethical principles. You want to act right, you want to do the right thing, but the circumstances around you will not allow you to act right. That is what we know as what? Threat. And there are 5 categories of threat. You have the self-interest threat, you have the self-review threat, you have the intimidation threat, you have the advocacy threat, and you have the familiarity or trust threat. These are the 5 threats that we have. I'm going to take them one after the other. The first one is self-interest threat. This is a threat to the auditor's objectivity, stemming from a financial or other self-interest. This could arise from a fear of losing a client. Examples of circumstances that might create self-interest stress for child accountants in public practice include, but not limited to this. Now, these are examples of self-interest stress. Number one, a financial interest in a client or jointly holding a financial interest with a client. So you have bought shares in a what? In a client business, like the case of Otto Anderson and Aaron Corporation. Number two, undue dependence on total fees from a client or an unduly large proportion will normally be 25% and above, which is inclusive of repetitive one-off assignment, the one we explained in independence, under independence. Number three, having a close business relationship with a client. What they are saying here is that you are supposed to be client, or the person supposed to be client to you, but you have gone past, you have advanced in your relationship, you are now like families, such that when your client wants to celebrate any major event or any milestone in his life, he invites you. He wants to celebrate wedding anniversary, you are there. His child dedication, you are there. His child graduation, you are there. Okay, all right? All of those things, you are always there. All of these things will lead to what we call self-interest. Because at the end of the day, what you're trying to do is that you want to be very close to the client, that if there's any business that opens, any opportunity that opens, right, your client will be the first to inform you. That is the whole essence. Okay? Concern about possibility of losing a client. That's what I just explained. Potential employment with a client is because you are the one that review their account every year. You know how much they pay their staff. And sometimes it comes to a time that, this person, these people, they are enjoying it. Look at how much they are paying them, their CFO. Let me just ask that their consultant will also be on their payroll. Something like that can also be what lead to what we call self-interest rate. Contingency fee related to an assurance engagement. That is an engagement I explained under independence. Where the client is saying that I need this audit report badly. I want to use it to get some funds from the bank or something like that. I want you to ensure that you perfect the report, that there will not be any reservations. There will not be any questions. If you're able to give me, you're going to assure me that I'm going to give you X amount of money. I'm going to give you X amount of money for doing that. That's what we mean by what? Contingency fee. All right. The next one, a loan to or from an assurance client or to any of his director or officers. That's another one. That one is self-explanatory, right? All of these are examples of what? Self-interest threat. What you should have at the back of your mind when you're looking at this in an exam is that any threat wherein the auditor or child accountant tends to focus more on himself at the expense of any other thing is known as what? Self-interest threat. All right? We go to the next one, self-review threat. Now, this occurs when any product or judgment of a previous assurance engagement or non-assurance engagement needs to be reevaluated in reaching conclusion on the assurance, or when a member of the assurance team was previously the director or officer of the assurance client or was an employee in a position to exert direct or significant influence over the subject matter of the assurance engagement. Let me break this one, that's how you get it. Now, what do you mean by self-review threat is this? An engagement was done by you. You are the practitioner that carried out that conducted the engagement. Now, after the engagement has been done, you submitted your report. Your client now wrote to your firm and said that he's not satisfied with that report, that he should redo the engagement. And they now appointed another member of your team, another member of that same team that did it, another member that you should lead that engagement and do the same thing and see whether there's going to be any discrepancy or variance from his own point of view. At that point in time, is what we know as what? Self-review trend. Because at that point in time, you're already cheating. What will happen? Will this person see and not do the right thing? So it's called what? That's an example of what? Self-review trend. Okay? Or in another instance, you just audited a company and you saw that this company is very good. And the management now came to you and said, wow, sir, I love the way you handled our engagement. I love it. It would be nice if you can join our team. Come and work for us. And they gave you a mouth-watering offer. You took the offer. and you resign from your audit firm and join the client company. You now became their what? The contact person when there is an audit. Knowing fully well that the same audit firm is still the one still auditing that client. So, and anytime they come, who did they see facing them? You, that you are once their engagement partner. You, that you are once their boss in the audit firm. They are now face to face with you. So what that means is that in a way, you have created what is called self-review, because you know all the tricks, you know all the angles that the audit firm will come from when it comes to what? Handling engagement. And you have already prepared your mind. So that means in all ways, you have already covered everything for them. You have already protected the interests of the clients against the audit firm. So that's another example of what? Self-review threat. Now, what does this mean? Now, if you want to take such offer, because I've seen a situation like that in an exam, they said that, oh, the person went to audit a client, and from there, the client now poached the engagement manager to come and work for them. They gave him X amount of money, mouth-watering offer. As an auditor, should you accept such engagement, such offer? What will you answer to? So your answer is this. If you find yourself in that situation, it's called what? A self-review threat. What you need to do is that you need to inform your audit firm, first of all, right? That this is what you saw on the field. And you explain everything in details to them. So they're already aware. The next thing you need to do now is because you already know the policy of the audit firm. Like when I worked in an audit firm, I wanted to go and audit one big client. And what did they say to me? They told me that before I can resign from the audit firm, I want to go and work for their clients, I must ensure that I have resigned from the audit firm for at least 2 years. So that when I'm going to join or to work with the client that we are going to audit after 2 years, it won't be an issue. But for me to just resign and go and join that client, it is not possible. So you'll have looked at the policy of the audit firm and see that, oh, you don't stand a chance if the audit firm should go ahead and report your case to the institute, because that will be a breach of process. The system of policy control is already there, part of the policies of the audit firm. So you need to tell the client and say, okay, fine, I appreciate everything you have said, I welcome it, but could you give me like 2 years? Or based on the policy of the audit firm, can you allow me to, maybe the policy of the audit firm is 2 years, let me resign. I'll resign now, and I hope you'll keep this job for me for the next 2 years. If they agree, you can resign. If not, just continue with your engagement and forget about the mouth-watering offer. I hope I've been able to answer somebody now. Is there any question, any comment, any observation with this?
In most cases, they will not even agree.
Thank you very much. Thank you.
That clause is predatory.
Thank you very much. So, thank you. So, you understand now. That will be my self-review threat. All right? So, let's continue. Now everybody is clear now, what I said. So, so the other instances of self-review, the discovery of a significant error during a re-evaluation of the work of a child accountant in public practice. Now, what do you mean by public practice? Anybody that works in an audit firm is an accountant in public practice. If you work in organizations, banks, companies, and the like, you are an accountant in private practice. Okay? Okay. Reporting on the operation of financial system after being involved in the design or implementation. You are the one that recommended. You are the one that so you come and implement the recommendation. That is also self-review. Okay. Having prepared the original data used to generate records that are the subject matter of the engagement is also the same category as with the above. What that means is that you are the one that helped to prepare the financial statement. Now, after that, you be the one to come and audit the financial statement. That is another example of what? Self-review. Okay. A member of the assurance team being or having recently being a director or officer of that client, the one I just explained, that you resign and join the client business, okay? A member of the assurance team being or having recently been employed by the client in a position to exert direct or indirect influence when it's a matter of your engagement. What this one means is that if your client allows you to take decision on their behalf, it's supposed not to be, it can be seen as what? Self-review threats, okay? Performing a service for a client that directly affects the subject matter of the assurance engagement. So you are acting on behalf of your clients. That means you are taking decisions for them. It's a form of what? Self-review threat, okay? So those are the scenarios you have under self-review threat. Any question? Any comments? Any observation? Okay, we continue. Go to the next one, advocacy threat. Now, there are apparent threats to the auditor's objectivity. If it comes to an advocate for or against the client position in an adversarial proceeding or situation, let me explain what this one is, so I will not be reading like this. When we talk about advocacy threat, it's a threat that affects the auditor, where he finds himself or herself in a position, right, where is in a position where is the situation, right, has made his objectivity to become what? To be compromised. It's a situation whereby it's a threat that affects the auditor such that it makes the auditor or child accountant objectivity to be what? To be compromised. Because you are going to act for or against the client in any adversarial proceedings. I'm going to explain with example, don't worry. Let's go on with the example now. What am I trying to say? So the first example is the one I gave under the, when I talk about mediating between two opposing clients. Is an example of what? Advocacy. Let me give another instance. Now, you're auditing your client, and your client says that we have been a private company for several years. We want to go public now. But the challenge we have is that we don't know how to go about registration or getting listed on the Nigerian Stock Exchange. You don't know anything about it. You now say that, don't worry, I will help you. I have an understanding. You are already the auditor. We say, don't worry, I'll take this as another engagement. And we act as your what? Reporting accountant. A reporting accountant is an accountant that assists the client to file returns or make some documentation with the what? With the Nigerian Security Exchange or the, what's it called? Second one, there are two of them, Security Exchange Commission and Nigerian Stock Exchange, yes, both of them. So when you have somebody that is mediating or liaising on behalf of the client to ensure that the client's documentation is submitted and presented to the Nigerian Stock Exchange or the Security and Exchange Commission, that is what the reporting accountant does. All right. So if you do that, it's a form of what? Advocacy threat. Because you are projecting the image of your what? Of your client. That's number one, advocacy. Number two, your client wants to take a loan from the bank. And they said that you need to present an audited report. And they now called on you and say, please help us to prepare our audit report. Upon preparation of the audit report, there's going to be a meeting where the bank's management would like the external auditor to be seated alongside the client before the loan will be approved and disbursed. And the auditor said, don't worry, I'll be there. You help them with the audited accounts. You're also present when they are supposed to decide or approve on disbursing loans to your client. When you find yourself as an auditor in that kind of situation, it is known as what? Advocacy threat. Why is it an advocacy threat? Because you are protecting, you are encouraging, you are trying to build the positive image for your what? For your client. Do you understand now? So all of this, anytime you see yourself acting on behalf of the client, you always want to protect it. You always want to be like a defender to them. Anytime you find yourself in such situation, that is known as what? Advocacy threat. All right? Any question? Okay, thank you. Somebody just asked a question and he said, if a question states that we should explain threat to objectivity, does it mean these 5 categories of threat? The answer is yes. Now, the two most popular or the two most common fundamental principles, all of these principles, right, can be summarized into 2: objectivity and what? Integrity. All of these fundamental principles that we just said, so the 7 of them, you can summarize the 7 as what? 2: objectivity and integrity. So if the question says that, let me look at the question, let me read the question again. It says that you have a question that says that we should explain threats to objectivity. Does it mean these 5 categories of threats? The answer is yes. So when they tell you that, what are the threats to objectivity? All of these threats that we just explained will affect objectivity. You understand? So you'll be correct if you answer like that. But before when you have a question like this is how you will not just go straight to those threats. Now, this is another thing that some students make. When you have a question like that, the first you first of all do is to do what? Is to define what is threat. Threats are what? Circumstances or situations that will breach or lead to the breach of the compliance with those what? Fundamental ethical principles. You start with that. Then you're now going to talk about what? Those threats itself. Those threats itself, we talk about it. Right? Explain all the 5 of them. List them, explain them. That's how you're going to go about it. If the question now says that if you include what are the safeguards, then we should talk about safeguards, but that's how you are going to. Don't just, because one thing you need to realize is this. You see in an exam, they tell you that, like that question, it might just be 3 marks. You just think that by the time I just list all those threats, they'll give me my 3 marks. It's not like that. If it's calculation, they will mark all your postings and say, okay, yes, even if you don't get the final, if your account is not balanced, they'll still give you some mark. But this one is not calculation, this is theoretical. So you must be able to explain, you must be able to earn that point, the marks, you must be able to earn it. You're able to write in such a way that the examiner will have no choice that will give you the maximum point. So you need to be as explicit as possible. Explain in details as possible. That's how you are going to go about answering the question before you can get the full score or the full mark in that particular question. Some of us, we look at the question, 1 mark, 2 marks, think it's just to write. It's not like that. There's some way they'll tell you that list. They tell you to list. Just list them. Don't explain. When they say that list and explain, you need to list, first of all, and explain them one after the other. Okay? I hope you are getting it. All right, let's continue. The third one is called, okay, the fourth one is called what? Familiarity threat. Familiarity or trust threat. What does this one mean? This one says that a threat where the auditor, by virtue of a close relationship with an associate, with an assurance client, is direct officers or employee, a firm or members of the assurance team, becomes too sympathetic to the client interest. What this one, summary of this one is that familiarity breeds content. Familiarity breeds content. So if you are too close to someone, at some point in time, you empathize with them. And then you start having that empathy for clients. That means that such auditor is affected by what? Familiarity or trust threat. Let me give an instance. So you're auditing, you have been the auditor for your client for like 5 years, and they are repaying your audit fees steadily. For the last 2 years, your audit fees has not been paid fully. And this is 2025. It's now saying that it still wants you to continue as the auditor. What should you do in that instance? That is a classical example of what? Familiarity or trust. Because if you say you will not oblige, it means that you are not a good person to the client, right? So what you should do is this. For you to show that you understand, to get your way out of this situation, this is what you do. Just tell that your client, okay, no problem, I'll be your auditor. But I want you to draw up a repayment plan, how you want to pay the outstanding audit fee. Then you will sign it off. Then we'll monitor it every time. I don't want any deviation from the repayment plan that we have done. If you can sign, if you are committed to this arrangement, there's no problem. I will work with you. But if you say, okay, don't worry, you continue to work for the person, it gets to a point that for the client to pay your audit fee, it becomes very difficult because the more the money becomes bigger, the more tendency, the more likely that the client will not want to pay. So you need to help them to plan your what? Your audit fee payment. Do you understand? Now that's what you mean by what? Familiarity or trust trait. Any question? Any comment? Any observation? Are we good?
Yes, we're good.
I'm good.
Okay, let's go to the last one before the time is up. We'll only be able to talk about the threats today. Next class, we'll start with the safeguard, then we'll wrap it up. Okay? So, intimidation threat, what does this mean? This occurs when a member of the assurance team may be deterred from acting objectively and exercising professional skills by threats, actual or perceived, from the directors, officers, or employee of an assurance client. Let me give you an list. Let me explain what this one means. Now, you can threaten somebody actually. You make it obvious. And you can also threaten somebody silently. That's what they mean by passive threat or passive intimidation threat. Let me explain. So you're auditing a client, and the client says that if you want me to pay your audit fee, just ensure that my audit report, there are no reservations. You give me a clean audit report. If you give me a qualified audit report, I'll not pay your audit fee. That is an actual intimidation threat. He has told you what he wants from you. But look at the second instance. I want to take a loan from the bank as an auditor. In your own best interest, I would like you to be present when the bank will disburse and approve the money to our organization. In your own best interest, it will be nice for you to be present when the bank will be approving and disbursing the loan to our organization. That is a passive intimidation trait. That is what he's saying here is that if you like, don't come. I know how to deal with you. That's what it means. So you need to be able to read in between the lines. I've seen a question where something like that played out. But most of the students did not get it because they could not deduce, they didn't understand the undertone of that statement by the client. So you are answering audit question. You need to read between the lines, understand the tone, understand the construction, understand the use of words before you start answering. It's not just about you reading and okay, I understood, you start writing. No, it's about what? Comprehension. It's about what? Comprehension. So audit, like I said, is not difficult, but it is very, very technical. And I'll repeat it again. All the 14 papers you are writing in ICAN, if there's one paper if there's one subject that you're still going to use long after you have qualified, it's the knowledge you have gathered from advanced audit and assurance. I can bet it with every other subject. If you don't work in certain sectors of the economy, you will not need you will not require the knowledge, particularly SFM. If you don't work in an investment company or a consulting company, most of the knowledge you have from SFM, you will not be able to utilize them after you qualify. So please, I know I've taken much time to explain this thing, and the reason is intentional. I could have finished this chapter today, but I want to show whereby everybody, when you pick this material and you read, you'll be able to understand and appreciate what has gone into developing this material. Another thing again you also need to take from here, this class, is that what we are out for is your success. Your success is what matters to me. When I see at the end of the diet, you are writing me, sir, I passed all this, I am now a child accountant, that's what gives me joy. Because as it is now, the number of child accountants we have in Nigeria is not up to 100,000. I'm saying it. We have over 250 million Nigerians, and the child accountant, dead and alive, we are not up to 100,000 now. What are we doing? So please, take time to read this material and always read ahead of the class. Now, the second facilitator will come up tomorrow. She will be taking you from tomorrow. Is that clear? So the assignment, I posted an assignment on the platform. Endeavor to practice it. Solve it on your own. Don't look at suggested solution. If you look at suggested solution, you are not helping yourself. Do it on your own as though you are writing an ICAN exam. The essence is that I want to understand where your pitfalls are. What are those things that make you to fail audit? Or what are those things you need to avoid if you don't want to fail audit? So please, at the end of every chapter, questions or assignments will be presented, and I will implore us to always attend those questions or assignments and send your answer directly to me. I'll review and send the feedback to you personally. It's not going to be public. Okay? Thank you so much for your time. So the class is going to be postponed or adjourned. So the next facilitator will come up tomorrow. You've seen the timetable, right? She'll be we'll start from professional responsibility and liability, chapter 4. That's what she's going to start from. When I come on board next Saturday, by the grace of God, I'm going to pick up from here before we go to the next area. Thank you so much for your time. I appreciate you all. All right?
Thanks, sir.
Thank
Sir,
you
hello,
very
sir.
much.
Hello, sir.
Yes, I'm with you.
Sorry, have you dropped this lecture? I mean, this material for us. Have you dropped it on the group?
Yes,
Sorry
yes,
to
I have.
it
It's on
has.
your
Okay.
platform.
Then please, I want to ask.
Yes.
This ICAN textbook, is it completely
Yes.
useless, or can we still make
Which ICAN textbook?
the one that we collect from their
Study
study
There's
pack?
no,
Study pack.
as it is now, there's no new study pack for 2025.
No, I know. I'm asking of the old one. Should I not collect it? This is my question.
Old one, please
Yes.
do not use it.
Oh, it's not even relevant at all.
This is a new syllabus now.
I know, but it's some aspect of it that is being
Don't
changed.
use it so that you don't bring confusion about. Don't bring confusion to yourself. Collect it, dump it. Don't use it.
Okay. All right. So this is my question. Thank you very much, sir.
All right, it's a pleasure. So, if you have any other question, enjoy the rest of your weekend. Thank you so much.